Do you want to know the way to have a better chance of getting a loan approved? Whether it's a traditional loan or an SBA loan, they fall under the same consideration when they are looked at by a bank. In this video, I'm going to go over the top 3 reasons that loans get denied and what you can do to make sure that doesn't happen to you. You've put a lot of time into your business and you're ready to approach a bank about financing your dream, only to have them say something like, "I'm really sorry, but it doesn't look like we're able to help you out at this time. Maybe try a bank down the street." Usually you're going to receive this type of response for 3 reasons. In lending, there are 5 C's of credit, and due to the 6 that lenders have to worry about. The 5 C's of credit are character, capital, capacity, collateral, and conditions. 2 of these categories are the ones that will get you disqualified from the loan the fastest. The third, I'll go over later on in the video, is collateral. Have you been denied a business loan in the past? Let me know in the comments below. Top of the list, in my opinion, is character. Now, when it comes to character, I'm not talking about whether you're helping to get a lost kitten out of a tree in your spare time, or if you hold a prestigious position within your community. The subcategory under this category is your credit score, or most importantly, your credit history. When it comes to obtaining most loans, you can either have no credit score or very high credit score. Can you have a credit score of 0? Yes. Your credit score can be 0 if you have never applied for any credit in your life. Having a credit score of 0 does not necessarily disqualify you from borrowing money. It does make it a little more difficult, and typically I do not see this in the business realm. Most people don't start a business as their first venture into the world. Most people will have some sort of credit card debt, school loans, house loans, mortgages, you name it, that'll build their credit before they open a business. And you're probably asking yourself, why does my personal credit matter when the business will be borrowing the money? The biggest reason is the bank has no idea what your business does or how it pays its bills. Because you have no track record up to this point, they can only go off of your personal credit score. If you have poor credit and there isn't a really good explanation as to why, such as a divorce or medical bills or something like that, those are easy to justify and you can kind of explain your way out of them. If it's just you stopped paying or didn't pay or late pays, it's going to be really hard to overcome that. That's why this is going to be the #1 reason you get turned down. Even if you've been an established business for a long time, the bank is still going to check your personal credit history. This is for a twofold purpose. 1, it tells the bank that you're maintaining your personal debt obligations outside of the business, and 2, that you don't have any judgments, collections, past due child support, anything like that personally that may impact the business loan. So let's say you have great credit and that's not the issue. That brings me to point number 2, capacity. Capacity is defined as the amount of money that you have in order to pay your bills. Your bank is going to look at what's called debt service coverage ratio and global debt service coverage ratio. Debt service coverage ratio is a pretty simple formula. You take all of the cash flow that's available after you pay your expenses, so your net income, you're going to add back your depreciation and any interest expense that you paid throughout the year, and that would go in the numerator. Then you're going to add up all of your debts, your annual payments, and that's going to go in the denominator. When you divide the numerator by the denominator, this will give you your debt service coverage ratio. Your financial institution will do the calculation for both the business by itself and also any debts that you have personally. They'll also add any income outside of the business to your numerator. This means anybody involved in the business that may have personal debt will also have to get factored into that calculation. I'm going to say the magic number for industry standard that most financial institutions go by is to have this number be above 125 or 1.25 or 125%. This means that you have enough additional income coming in over the year to pay 25% above your debt level. If your top and bottom number equals 1, that means that you're just making enough income to pay your debts. Now, when it comes to SBA lending, the SBA does have a lower threshold and only requires 1.15, 115% of debt service coverage, but they also require it on the business itself. Since the SBA does not traditionally lend its own money, with the exception of the EIDL program, the banks are going to use their underwriting guidelines in order to process loans. A good rule of thumb is look for that 1.25, 125%, whichever way you want to look at it, and make sure you're above it when you apply. A lot of small businesses make the mistake of listening to other small businesses when it comes to showing a profit. The common misconception is you need to show the least amount of money possible so you don't pay taxes. I understand that not everyone likes paying taxes, but looking at the cash flow from the tax returns is really the only way that banks have of knowing the loan will be repaid. The tax return is what you're reporting to the government how much your business makes. Because banks and other lending institutions are federally regulated, we have to take those tax returns as gospel. There's no ifs, ands, or buts and arguing the facts about it, that you may have a safe in your basement full of cash, that your customers only pay you by cash and you're getting out of the government. Not something you really want to say to a bank, because if they were ever subpoenaed for your accounts, they would have to state that you made that comment to them. So they can only use what you show on your tax returns, and they cannot use any outside other information. If a bank looks at your personal taxes and see that you don't declare any salaries because you're only taking distributions from the business, that's going to count against you on the personal side. On the other hand, if your business doesn't show positive cash flow as the net number after all your deductions, which that's okay because you have other legal tax advantages such as depreciation and interest that you can add back in, that's going to help your cash flow. At the end of the day, if that's a negative number or barely above a 1-to-1, like I said with your debts, you're not going to get the loan. How this comes up is, let's say your business is making money and you decide that you don't want to show a lot of money to pay taxes. So you start adding in little expenses on your business. Maybe filling up a personal vehicle on a company gas card, or deciding to pay your family's cell phone bill out of the business. Little things like that can chip away from your expenses. I don't work for the government and I'm not here to judge how you spend the money. I'm just saying you can't come back to the bank and say, oh, you have to add those back into cash flow because I just paid them to get out of taxes. Because the cash from the business is the only way the loan is going to get paid, and even though the bank will take into account your personal income, at the end of the day, if the business can't pay the loan, you're required to pay it. But the banks cannot take that as a primary source of repayment. Cash flow is the number 2 reason of you getting denied, but it may even be the number 1 reason if your loan officer is strictly looking at numbers and making a preliminary decision before running credit. So this is going to lead us into our number 3 reason why your loan will be denied: collateral. Collateral is something pledged as a security for repayment of a loan to be forfeited in the event of default. All banks and lending institutions are going to have their own definitions of what collateral can be. They're also going to have their own lending guidelines when it comes to the amount of collateral value that they're willing to lend against. On the personal side, when you go to a car lot and you buy a brand new car, typically a personal loan or a personal vehicle loan, they will be allowed to go up to 100% value of the vehicle. Sometimes they can even go 110, 120%. In the business world, that's not the case. Everything that I've seen, typically the maximum amount of a loan to value is going to be 90% of the collateral's value. As the age of the vehicle or equipment increases, the percentage will decrease in the amount of the loan that the bank is willing to give. This doesn't just apply to vehicles. Most commercial loans or small business loans are going to be capped at the 80% loan to value. That means if a piece of equipment or property vehicle is worth $100,000, or you have a sales agreement to purchase a $100,000 piece of equipment, the bank will typically only lend 80%. This means that you're going to have to come up with the additional 20% or $20,000 on the day of your closing. As I've talked about in other videos, SBA loans are the only ones where the government comes in with a 75% guarantee, and most recently the SBA increased it to a 90% guarantee on all new business loans made since the pandemic. What this means is if your loan goes bad and you stop paying and they have no choice but to repossess those assets that you pledged as collateral, typically that asset is worth way less than you owe on it. Most of the times the banks will kindly ask you to repay the remainder that you owe, but if your business goes under and you pretty much can't pay from there, they're going to start taking assets until they're made whole. In this case, the SBA will step in, pay the bank back the 75 or 90% of the loan, and then the SBA is going to come after you. The bottom line is it's never good to default on a loan, but it's especially not good to default on an SBA guaranteed loan. They will go after your personal assets, which means if you typically receive a tax refund at the end of the year, that's going to go to pay down your loan. Defaulting on any loan is a bad idea no matter which way you do it. At the end of the day, the banks want to give loans. That's what they're in business for, and that's how they make money. Now, there's always risk when you lend money that you won't get repaid, but that's why your interest rate is proportional to that risk. The riskier the loan, the higher the interest rate is. To have the best possible chance of getting a loan, make sure that these 3 categories are taken care of. There's not a lot you can do with the collateral aspect other than make sure you're looking at equipment that maintains its value or is not very expensive. A collateral shortfall can be overcome by utilizing a facility such as the SBA, adding additional guarantor, or someone else with better credit to possibly co-sign for your loan. The things that you can control are your credit history and your cash flow. Make sure you're paying your bills on time on the personal side and also on the business side. And when it comes to cash flow for the business, make sure you're managing it correctly. And I encourage you to speak to an accountant or CPA, but also know that their job is to minimize your taxable liability. They will use whatever tools that are necessary in order to make sure that you pay the least amount of tax. Unfortunately, that sometimes does not bode well when you go to borrow money. I encourage you to have multiple meetings throughout the year with your accountant and let them know what you're planning on doing, where your business is going, and whether you're planning on purchasing equipment or financing something. Professionals like that will help to guide you and give you the necessary information that you need to make your business successful. I hope you got a lot of value out of this video and that you have a better understanding of why loans get denied. If you have any other questions or comments, make sure you post them below. And until next time, have a great day.